Everyone is talking about the new 50-year mortgage. And on the surface, it sounds like a magic fix. Lower monthly payments, more affordability, easier to qualify. But here's what no one is saying out loud. For most buyers out there, this loan will actually cost you more. It slows down your equity and it puts your long-term financial safety at risk. Let me show you the numbers so you can protect yourself. Hi everyone, it's Jack Ma with Century 21 Master. My goal is simple, give you clear, honest guidance so you can make smart decisions without the hype. Imagine you're trying to buy a home. Rates are high, prices are high, and the monthly payment just feels impossible. Then someone comes in, introduces the 50-year mortgage. And the pitch sounds great. Smaller monthly payment means more breathing room. And it just feels like a lifeline. But just like most shortcuts, there is always a catch. Here's the truth. A lower monthly payment sounds great, but it comes with 3 hidden costs. Cost number 1, you pay dramatically more interest. Cost number 2, your equity grows painfully slow. And cost number 3, you stay in debt decades longer than traditional homeowners. And the scariest part, many people who chooses a 50-year mortgage never actually end up owning the home outright. Let's look at the math. Example, a $700,000 home at 6%. A 30-year mortgage costs about $4,200 a month. A 50-year mortgage costs about $3,500 a month. That's about $600 in monthly saving. But here's the catch. Total interest on a 30-year loan, it's about $818,000. Total interest on a 50-year loan, it's about $1.45 million. That's millions. That's over $637,000 more for the very, very same house. And your equity? After 10 years, a 30-year homeowner has over $120,000 more equity than someone on a 50-year mortgage. And there's another key point most people overlook. When you compare a 30-year mortgage to a 50-year mortgage, the interest rate is almost never the same. Lenders take on way more risk over 50 years compared to 30 years. The loan stays on their book for 2 extra decades. There's more exposure to inflation. There's a higher chance of default, refinance, or economic volatility. And they have to forecast multiple market cycles, not just one. And for that same reason, lenders almost always charge more for a 50-year loan. A realistic example, a 30-year mortgage today might be around 6.25%. But a 50-year mortgage, again, this is hypothetical and speculation, probably close to 7% or even higher. That small difference looks tiny, but over 50 years, it's massive. It increases the total interest. It slows down your equity even more. It pushes financial freedom further away. Even the numbers from our first comparison become worse when you plug in the higher 50-year mortgage rate. So the long-term cost becomes even steeper. So what does all this mean? A 50-year mortgage might lower your monthly payment a little bit, but it does it by charging you way more interest at a higher rate for a much longer period of time. And for most homeowners, that combination is financially dangerous. It helps very few people and most likely hurts far more. I understand why people look at this option. Affordability is tough. The monthly payment matters. But in almost every real life scenario I see, the 50-year mortgage will end up being a trap, not a solution. There are few rare cases where it might work, like certain investors with short-term plans. But for 99% of everyday buyer, it just weakens your financial foundation. Here's what works much better. Buy slightly below your max. You sell the credit to buy down the rate. Choose communities with strong appreciation. And when rate drop, just refinance to get the best long-term outcome. These strategies help you build equity faster, pay less interest, and stay financially strong. Once you see the real math, everything changes. A 50-year mortgage stops looking like a solution and start looking like what it truly is, a short-term relief with long-term consequences. The real win is choosing a plan that protects your future and builds your wealth. If you want to dive deeper into this topic and see the full breakdown with the numbers and examples, click the link below to read the full blog on my website. And if you need help understanding what makes the most sense for your goal and budget, reach out anytime. I'm always here to help you to make a confident and well-informed decision. I'll talk to you soon. Bye-bye.